All right. We now did illustration 30. What I would like to see is in illustration 30, we assume that the payments are being done at the end of each year. I would like to see how the lease accounting will change if the payments are made at the beginning of each year. All right. Instead of assuming that 20,000, 30,000, and 50,000 were paid at the end of the respective years, I would like to see that what would happen if the payments were made at the beginning of each year. Therefore, the 20,000 payment for year one is going to be made at the beginning of year one. Beginning of year one basically represents today, right? Beginning of year one is today, which is year zero. Same way, 30,000, which is the payment for year two, is going to be made at the beginning of year two. Beginning of year two is the same as end of year one. All right, 30,000 is being made at the beginning of year two or end of year one. Similarly, 50,000, which is the payment for year 3, is going to be made at the beginning of year 3 or end of year 2. Beginning of year 3 or end of year 2. Now let us actually see how the accounting is going to change. All right, so now we're doing illustration 30 only, but we're just carving out our own question from illustration 30, assuming that payments are being done at the beginning of each year. So step 1 will be initial recognition, where we are required to recognize right of use asset and lease liability, and we actually have to calculate the present value of the lease payments. We have to calculate the present value of the lease payments that are going to be made. So let's start by calculating the present value of lease payments. I will be plotting down the cash flows, which is year, cash flow, present value factor at 12%, and we then have discounted cash flow. Now, the first year lease payment is going to be made at the beginning of year one. Beginning of year one is actually equal to 0. All right. So the year will be 0 and lease payment is being made for year one. The lease payment for year one is being made today itself at the beginning of year one, which is today itself. Same way, the payment for year two will be made at the beginning of year two. Beginning of year two is going to be year one, end of year one. Beginning of year two is going to be at the end of year one, and the payment for year three will be made at the end of year two. Payment for year three will be made at the end of year two. So the cash flows are going to be 20,000, 30,000 and 50,000, but the timing is actually different. All right. Earlier, we presumed that 50,000 is being paid at the end of year 3. Now 50,000 is being paid at the end of year 2 or beginning of year 3. Same way, 20,000 is supposed to be paid at the beginning of year 1. The beginning of year 1 is also represented by year 0. Now, because the timings are different, the present value factor will be different. Present value factor for year 0 is going to be 1. Present value factor for year 1 will be the same as what we calculated earlier, 1 divided by 1.12, which is 0.8929, or 1 divided by 1.12, the whole square will be the present. And the present value factor for year 2 will be 0.7972, which is end of year 2 or beginning of year 3. So the discounted cash flows now will actually be equal to 20,000 for the first year. You don't need to calculate. For the second year, it will be 30,000 multiplied by 0.8929, which is equal to 26,787. And for the third year payment, it's going to be 50,000 multiplied by 0.7972, which is equal to 39,860. Remember, the payment is still for the third year, but while calculating the discounted cash flow, you're assuming that the payment is being done at the end of year 2 or beginning of year 3. And that is the reason the present value factors are calculated based on 1 divided by 1.12, the whole square. All right, this is 1.12 the whole square, and this is 1 divided by 1.12 the whole power 1. All right, so the sum total of discounted cash flows is going to be 20,000 plus 26,787 plus 39,860, which is equal to 86,647. It's 86,647. The amount that we originally got was, I think, around 75,000 or something. All right, what we originally got was 77,364. Now it has come to 86,000. Why is this higher? Because under original illustration 30, the cash flows were standing far off. They were standing at the end of year 1, end of year 2, and end of year 3. Over here, the cash flows are standing standing today, year one and year two. It's standing today, year one and year two, and therefore we are actually having a discounted cash flow of 86,647. We are actually having 86,647. So ROU asset will be recognized at 86,647. And correspondingly, lease liability will also be recognized at 86,647. All right, so ROU asset debit to lease liability of 86,647. Step number 2 will be ROU asset schedule. ROU asset schedule, we are going to depreciate the ROU asset over the lease term. ROU asset is going to be depreciated over the lease term, which in this case is 3 years. Therefore, depreciation will be equal to 86,647, the whole divided by 3. 86,647 divided by 3, which is equal to rupees 28,882. 28,882 will be the depreciation per annum. I'm not preparing the ROU asset schedule, but you can prepare it by yourself, where you have year 1, year 2 and year 3, and you will actually plot down the beginning value of the asset, depreciation, and the closing value of the asset. All right, for each of the 3 years, you can plot the beginning value, depreciation and closing value, and at the end of the 3rd year, ROU asset will go down to 0. That will be the step number 2. Step number 3 will be the lease liability schedule. Just like how we actually had lease liability schedule in illustration 30, we will also prepare lease liability schedule over here. All right. If you actually recall what we did in illustration 30, in illustration 30, we first calculated the interest expense for the year, and then we actually had the lease payment. What we did over there was we calculated interest expense for the year at 12%, and at the end of the year, we had a payment. All right, let me quickly just show you the schedule. We calculated interest first for year 1 at 77,000 multiplied by 12%, and we then have payment for the year. In this case, payment is being done at the beginning of each year. The payment is being done today itself. All right, so first we'll actually record the payment, and we will then actually have interest expense, because interest is recognized at the end of each year, whereas payment is being done at the beginning. Remember, interest expense, you recognize it at the end of the year, right? If in case of a borrowing also, interest will be recognized at the end of the year. Similarly, over here as well, interest is recognized at the end of the year, but payment is being done at the beginning of each year. So first we will actually have a payment entry, and then we will actually have interest computation. All right, so let's actually plot down the payment entry first. The payment entry is going to be lease liability debit 20,000, and we are going to have credit bank of 20,000. All right, so we started with a lease liability of 6,647. We are then making a payment of 20,000 immediately on the date of commencement itself. As soon as we recognize this lease liability of 86,000, I'm recording another journal which is recognizing the payment that we are making to the bank, to the lessor. All right, the payment that we are making to the lessor is being recognized as a lease liability reduction. If you actually think of it, after this payment is done, the lease liability in the books will be 86,647. All right, let me just plot it. The balance in lease liability on date of commencement will be 86,647 less 20,000, which is equal to 66,647. All right, so it's going to be 66,647. Let me see if I've taken the numbers correctly. Yeah, 86,647 less 20,000, which is equal to 66,000. So today I recognize a lease liability of 86,000. Immediately I make a payment of 20,000 to the lessor. Therefore, the balance in lease liability schedule will be 66,647. Now, interest will be recognized at the end of year 1. Remember, this payment is being done at beginning of year 1. This payment is being done at beginning of year 1. Interest is going to be recognized at end of year one. Interest will be recognized at end of year one. Interest is now not going to be recognized at 86,000 multiplied by 12 percentage. It will actually be recognized as 66,000 multiplied by 12 percentage. Remember, the amount of borrowing that has been outstanding throughout year one is not 86,000, it is actually 66,000. All right, you had a borrowing on day zero of 86,000, but immediately you repaid 20,000. Therefore, your borrowing that has been outstanding throughout the year is only 66,000, and you have to calculate interest on 66,647. So interest will actually be calculated as 66,647 multiplied by 12 percentage, which will be equal to 7,998. It's 7,998. So the interest that we are going to recognize for year one will be 7,998. All right, I'm repeating myself. We actually had a borrowing on day zero of 86,000, but on the same day I repaid 20,000. Therefore, my net borrowing is only 66,647. When I recognize interest for year one, my outstanding principal throughout the year is only 66,647. Therefore, what I need to recognize interest on is only 66,000. I will be recognizing interest on 66 multiplied by 12 percentage, which is equal to 7,998. The journal entry for this is going to be the same as what we discussed previously, which is interest expense debit 7,998 to lease liability, which is 7,998 again. All right, so interest expense is going to increase your lease liability. Interest expense, just like the previous illustration, is going to increase the lease liability. All right, so in illustration 30, because we were making payments at the end of each year, what I did was I first recognized interest. I recognized interest on 77,000 because 77,000 was the total borrowing that was outstanding throughout the year. But in this case, as soon as I recognized a borrowing of 86,000, I actually repaid 20,000. So the outstanding borrowing throughout the year is only 66,647, and I recognize interest on 66,647. How would we actually put this in the lease liability schedule? Just like how we prepared a lease liability schedule in illustration 30, if I want to prepare a lease liability schedule over here also, how do we actually put it? Okay, the lease liability schedule over here will actually contain years 1, 2, and 3. I'm intentionally leaving some gap. I then have beginning value. I then deduct payments first. In the previous illustration, what I did was I had beginning value, interest, and payments, and then I add the closing value. Over here, since payments are being done at the beginning of each year, I'm plotting payments first, and then I will plot the interest. I first will plot the payments, and then I will plot the interest. And then let us calculate something called beginning value minus payments. All right, beginning value minus the payments. I then have interest at 12 percentage, and then we have closing value. All right, and then we have the closing balance. All right, I will tell you what the references of beginning value less payments as we proceed. So at the year one beginning, I recognize the lease liability of 86,647. 86,647 was the lease liability that I recognized. Immediately, I made a payment of 20,000. After making this payment, my liability was 66,647. The borrowing amount reduced to 66,647. Interest for year one is going to be computed on this amount. Interest is going to be computed on beginning value less payments. So I am having 66,647 multiplied by 12 percentage, which is 7,998. And the closing value will be 66,647 plus 7,998, which is equal to 74,645. All right. So when I prepare the balance sheet for the end of year one, I will have a lease liability of 74,645. The ending value for year one will become the beginning value for year two. So 74,645 will become the beginning value for year two. So my borrowing at the beginning of year two was 74,645. Immediately on day one of year two itself, I made a payment of 30,000. I am making a payment of 30,000 at the beginning of year two. Therefore, after making this payment, the lease liability would be 44,645. The remaining lease liability is going to be 44,645. This is going to be my outstanding borrowing as at the beginning of year two. The outstanding lease liability or outstanding borrowing at the beginning of year two is 44,645. Interest is now going to be computed on 44,645. Now interest for year 2 will be calculated on the principal that was outstanding during year 2. The principal that was outstanding during year 2 is 44,645. So I calculate interest on this and the interest is amounting to 5,357. All right, the sum of beginning value plus interest is going to be equal to the sum of beginning value less payments plus interest is going to be equal to 50,002. All right, it's going to be equal to 50,002. All right, this is the closing value at the end of year 2. The closing value at the end of year 2 is 50,002 rupees. This is going to be reflected on the balance sheet as lease liability. The ending value for year 2 will become the beginning value for year 3. The beginning value for year 3 will therefore be 50,002 rupees. And I, at the beginning of year 3 only, am making a payment of 50,000. I'm making a payment of 50,000 and therefore I'm actually having a beginning value less payment. The remaining lease liability will be 2 rupees. The remaining borrowing or remaining lease liability is going to be 2 rupees. That's actually a rounding error. Maybe what we could have actually done is recognized an interest of 5,355 only, so that this would have been 50,000. And accordingly, this 50,000 would have exactly matched the payment and this would have actually been equal to 0. All right, that 2 rupees was left only because of rounding. Therefore, the interest I'm actually adjusting it as 5,355. All right, why is the interest 0 for year 3? Why is the interest actually 0 for year 3? Because the principal that was outstanding during year 3 is actually 0. I had to make a payment of 50,000 at the beginning of year 3. I made that payment of 50,000 at the beginning of year 3 itself. Therefore, there is no principal that is outstanding during year 3 and therefore interest for year 3 is actually going to be 0 and the closing balance at the end of year 3 is also going to be equal to 0. The lease liability in this case is becoming 0 at the beginning of year 3 only. As soon as I make the payment of 50,000, the lease liability is actually going to become 0. All right, lease liability is becoming 0 as soon as I make the payment at the beginning of year 3 and therefore since the lease liability is 0 at the beginning of year 3 itself, I do not have any interest that I'm going to recognize in year 3. Interest for year 3 will actually be equal to 0. All right, I only have interest in year 1 and year 2. Interest is only going to be there in year 1 and year 2. I'm repeating myself. What is actually happening in this case is we have recognized a lease liability of 86,000, but we made a payment instantly of 20,000. Therefore, the borrowing that is outstanding is only 66,647 and hence interest is calculated only on the 66,000. Interest is supposed to be calculated on the outstanding borrowing. Outstanding borrowing throughout the year was 66,000 because the payment was done earlier itself in advance itself and hence we have a interest expense of 7,998 and this interest expense is increasing my lease liability and we report 74,645. That 74,645 becomes the beginning value for year 2. In the beginning of year 2 itself, I make a payment of 30,000 and hence the outstanding borrowing is now 44,645. On this 44,645, we are recognizing an interest of 5,350 5 at the rate of 12%. And then we have a closing balance of 50,000. That closing balance of 50,000 is getting rolled forward to year 3. And then we actually have a zero lease liability balance once the payment is done at the beginning of year 3. All right. So there is not much of a change for ROU because ROU is still being depreciated over a period of 3 years. The amount of depreciation is changing, but the concept is actually not changing. We have an equal amount of depreciation in case of ROU, whereas in case of lease liability, there is a change in the way interest is calculated. If interest payments are done at the end of the year, we calculate interest on the beginning balance. If interest payments are being done at the end of the year, we first calculate interest and then deduct payment. But if the payments are being done at the beginning of the year, we first deduct payment and then calculate interest, because interest is an end of the year activity. We calculate interest at the end of the year. Therefore, we deduct payments first and then we calculate interest on beginning value less payments that have been made. All right, so that is the change if payments are made in advance. All right, with that, we are actually done with illustration 30. Over here also, if you actually aggregate depreciation plus interest, you will actually get in a total of 1 lakh rupees throughout the 3 years. If you aggregate the depreciation for each year, which is 28,000, plus the interest of 7,900 and 5,300, you will actually get a total expense of 1 lakh rupees. If you want, you could actually try that at your end. The interest for year 3 is 0, but you'll have a depreciation in year 3. You will continue to have a depreciation of 25,000 or whatever the value was, 28,000 in year 3, but you will have no interest in year 3. But the sum total of year 1 expense plus year 2 expense plus year 3 expense will actually be equal to 1 lakh rupees, as was the case earlier as well. All right, so that's it for this lecture, guys. Thank you so much. Bye.